Okay, where are you watching from? Let me know in the chat box. Okay, let me know where you're watching from in the chat box. I just left this chat here so that I can revise on our last week's trade. Based on our prediction and the outcome of the market. So we can see what played out here. Okay, we can see what played out here. Okay, I'm waiting for you to drop your comment in the chat box. All right, drop your comment in the chat box. Hey, someone is watching from India. All right, you're welcome. You're welcome. Okay, you're welcome. You're welcome. All right, so let's just have a quick revision on our last week trade. All right. Okay, so last week, we had market breaking out from this level, all right, and we said if market breaks out from this level is the next resistance zone, after which there would be a turnaround. Okay, and we saw how it had played out here. Okay, and we'll still see it play out more, and that is why we are here today to further look into what the market is saying. Okay, good. Now we would start with a quick brief on why we are here, all right, and what we would be looking at in today's section. All right, and in today's session it will still be on technical analysis using price action, and my name remains Tunmise Olaoluwa. Now here is a quick disclaimer. Okay, now that any information, news, research, price analysis that is being discussed and shared on this webinar or linked to this presentation is provided as a general market commentary and does not constitute investment advice. All right, good. Now a quick one about me. My name is Tunmise Olaoluwa. I have 7 years experience in trading and also have a solid background in finance and quantitative research. I strictly focus on Euro USD, USD JPY, JPY USD JPY. All right, and in cryptocurrency I trade Bitcoin. Okay, so let's go. Now today we're going to be discussing a top-down approach strategy. We're going to review Euro USD currency pair. Also, we're going to review price movement of Euro USD. Okay, good. Now this session is a 45-minute session, and we can always use the YouTube live chat to communicate. All right, so when I ask this question, we can always communicate from the YouTube live chat. All right, so now what does the strategy we are considering today encompasses? All right, what does it consist? It consists of analyzing historical price movements, utilizing candlestick formation, chart patterns, and market structure. Now, what kind of traders is suitable? What kind of traders is it suitable for? It's suitable for position traders, intraday traders, and swing traders. And it can be used on high liquidity periods and also from the time frame between 1 hour time frame to the monthly time frame. Okay, good. Now let's get to our live session. Okay, so today we'll be going through top to bottom approach starting from the monthly time frame. Okay, so what is interesting on the monthly time frame is what we are looking at. Now, of course, we've previously established that there is a downward movement on Euro USD. Okay, the momentum is downward slopey. And when we look at the key levels of support and resistance, we see that we have here as a key level, we have another key level here. Okay, so these are key levels that we want to pay attention to in our analysis. And we can see that at each of these key levels, there has been price reaction at each of these key levels. Okay, so we can see that price has been struggling to break out of this level and was pushed back. Okay, and of course we had several events that created a positive outlook on the dollar as compared to the euro, and the demand for the dollar became higher than the demand for euro, and that is what we can see play out in this sharp drawdown in price. Now, where are we and where are we going to? So that is where we are. Now, when we look at this for long-term players, of course, this is the next support zone. Okay, if price is going to drop further from these higher time frames, 1 month candlestick, all right, we would be seeing a further drop to this support zone. So because this support zone is the zone that key players, institutions are also looking at, okay, where we would see a significant drop in Euro USD. Okay, now let me take this off. Now this makes it interesting because from here to this, if this level does not hold, which there are higher chances that that level will not hold. Okay, this level, there are higher chances that this level will not hold. If this level does not hold, then our next target level is 0.9831. That's for position traders. Okay, for position traders. Let's further go down to the weekly time frame. Now the weekly time frame is giving us a very interesting picture that the monthly time frame didn't give us. Can you see? This is a picture that the weekly time frame, monthly time frame is giving us. Now this is a picture that the weekly time frame is giving us. Right? On the monthly time frame, market is very bearish, even at the most recent month. All right? But on the weekly time frame, we can see that there is a buy momentum, okay, that changed the direction a bit. All right, and look at what we can see here. Okay, look at it. So this is another key level, of course, that we've marked that should be watched out for. And we can see that price actually turned around at that key level. As you can see here, price turned around at this key level. Now we can see that at this support zone here, what type of candlestick is this? This one in the middle here, what kind of candlestick is it? Let me know in the comment section. What candlestick is this, and what does it mean in a support zone after a continuous fall in price? What does this candlestick mean in a support zone after a continuous fall in price? What does this candlestick mean in a support zone after a continuous fall in price? Who can tell? Who can tell? Who is going first? What does this candlestick mean? What's the name of this candlestick? What does it mean? Someone said morning star. Look at it closely. Is this a morning star? Okay. Look at it. Look at it closely. Okay. So now, when looking at this candlestick now, is similar to a doji, right? Now, this goes to show that there is an equilibrium point at this level where the volume of demand is almost equal to the volume of supply. All right, and that led to an indecision in the direction of the market here. And what did we see when this doji appeared? Okay, we saw that what the buyers regained control of the market. And how significant is this control that they regained? Now look at the candlestick, the height of this candlestick. Now you can see that it opened at this level. Let me get this brush. It opened at this level, okay, and closed at this level above 1, 2, 3, above these 3 closes. Okay, it closed above this candle, 1, it closed above this candle, it closed above this candle, it closed above 3 candles, and closed at par with the 4th candle. All right, now this goes to show how significant this candlestick is in changing the market direction temporarily or for the time being, for a longer period of time. Okay, so this buy momentum that came in here is significant, being that it's on a higher time frame, which is the weekly time frame, okay, and closed above the last 3 candles. Okay, it closed above the last 3 candles. And of course, if we go further into lower time frames, you will discover that this was a breakout, and after a breakout you can see a retest or a pullback. Okay, so what do I expect from this level, from the weekly time frame, is a further rise in price. Okay, a further rise in price. That is what I expect in this market. Okay, yeah, so let me just take this off. So we are expecting to see a further push in price. that closes above this level. Okay, good. So for more clearer view, let's go down to the lower time frame, which is the daily time frame. So here is the daily time frame. So you can see what I was saying earlier, that this must have been a breakout candle, all right, and we can see it play out here. Okay, breaking out of this zone, and of course after a breakout is what? A pullback. Okay, after a breakout is a pullback. So now from here we are expecting a further push in price to the upside. Yes, so from here we are expecting a further push to the upside. And it goes to show that on the weekly and the daily time frame there is a buy signal. On the monthly time frame is showing a sell signal, but when we go into the lower time frames like the weekly and the daily time frames, there is a buy signal, all right, showing that there is a buy momentum. As you can see that at this level here, let me change this. Okay, good. Yeah, at this level here we can see that there are wicks. Let me give it a more darker picture so that okay, does this work? Does this work? Okay, so there are wicks. Okay, good. Let me just remove it. But at this level here you can see that there are wicks. Okay, showing that what there is a buy momentum coming in, pushing price upwards. All right, good. Now let's go down to the 4 hours time frame. Now, so we can see that on the 4 hours time frame we are having an interesting view here. Okay, and price broke out of this level, went up, came down. Okay, what are we going to see again? It's going to go up, and this time of course is we're on a lower time frame, so we should see so many threshold to put our take profit level. So yes, so first take profit level is here. Okay, so if price breaks out of this level and moves up, this is the second take profit level. This is for intraday traders, okay, who wants to trade the 4 hours time frame. Now if you have any question, please ask in the comment section. If you have any question, drop your comment in the comment section, in the chat box. Drop your comment in the chat box. Drop your comment in the chat box. So let's look at the 1 hour time frame. So of course we can see that on the 1 hour time frame, the logic remains the same. All right, the logic remains the same. Okay, so market experienced a breakout from this level. Okay, pushed up, came back, push up again. So we are anticipating a push up from this support zone. Okay, from this support zone. So someone is asking, what is the use of the M1? That is 1 minute time frame. It's used by those who want to trade high frequency market, right? So because market moves very fast on the 1 minute time frame, okay? So those who are into scalping uses it to scalp, they use it to scalp the market, all right, for big gains in a short time period, all right. So that's it. The 1 minute time frame is used by scalpers, high frequency traders, and the likes. Okay. Thank you for your question, Dio. So, we are still bullish on the 1 hour time frame. All right? Awesome. Someone said, can gold take a rejection? So, we want to check on gold to see what gold has for us. Okay? Okay, so gold has been moving great. So yeah, key levels to check out on gold. Let's map out those key levels. All right, so now we've identified those key levels to check out on gold. Now gold has been on a steroid, on a bullish steroid, as we can see, bullish steroid. Bullish. Okay, and the reason why gold is bullish, and this bullish, is because of the macroeconomic environment being unfavorable to investors when it comes to currency fluctuation, and gold being a safe haven in times like this, right? So we see investors preferring to leverage on gold. So let's see what gold has for us. So if you're a gold trader, you can just be bullish on gold. All right. So here we go. Let's go down to the weekly time frame. All right, so we can see what's going on here. So now when we look at how gold has been moving after its breakout in 2023 here, breaking out 2024, goes up, retested, broke out. All right, and when we enter 2025 now, we see that it has pulled back again. Okay, and what are we expecting? A pushback up. a push up. So you might want to, there are different ways you can make your entry here, right? You can check the distance between gold's move from this level to this level and gold's move from this level to this level. Okay, when you get the average, all right, you can then use the average to project gold's move in the next 6 months. So you can then decide to target that threshold. Okay, so we see gold move from 2000, let's say we see gold move from $2,444 to 2,324, dollars. All right, and that is like a difference of $300 from here to here. Okay, and then from that same level, okay, of 2324 to the pullback zone here of 2602 is still within 280 to 300. All right, now from 2600 plus the average of what we've been looking at, 300. So yeah, so the next move of gold would touch, let me erase all this so that I can. So the next move of gold would touch the, yes, of course, to come here, it's already making that move and it will touch here. So there's a difference of 300 from here to here. Then from that level upward again, our next target on gold would now be from this level to 3,200. Okay, now this is just on some minor quantitative reasoning. And what did I use in just looking at the average projection of gold's move is to check the distance it had moved in a previous run, all right, before retesting. So these are the distance we might just be looking at as our target level for gold. Okay, is that clear? Let me know in the chat box if this is clear. All right, so the average move from year to year is between 280 to 300. Average move from year to year is 280 to 300. So we check the average move of 380 to 200, 280 to 300 here. Okay, and the next 280 to 300 here. All right, so somebody is asking, what is the best time frame to consider as a swing trader before making an order? What is the best trade to consider as a swing trader before making an order? Okay, so for swing traders, you are looking at 4 hours, daily, weekly, and monthly time frame. All right, so it's basically you are looking at the, you are looking at daily, weekly, and monthly time frame. Okay, you might want to execute on the 4 hours time frame, but you are basically, for swing traders, your best bet is to look at the daily time frame, the weekly time frame, and the monthly time frame. Okay, yeah. Any further question? Any further question? So when we go deeper on gold, it becomes more clearer, the next target level of gold. All right, you get to know that gold's target level is here. That's the next target level on gold. Have I answered your question, Ekundayo? Okay, any other question, please ask in the chat box. All right, so let's go down to the 4 hours time frame. So one interesting thing about multiple time frame analysis is that it helps you to see in reality and at a close range what is happening at the current moment. Okay, so you can see here already on this 4 hours time frame. Okay, someone said M1 traders, when it is good open, if you are using. Okay, so you can see how price has been moving. Okay, so from here we might see a further move in price up before a retest, then we go up again. However, this is the target level. This is the next target level. All right. Awesome. You're welcome, Ekundai. So this is the next target level on gold. All right, on gold. So it's also important that while trading gold, you have to follow some fundamental news. Okay, you have to follow some fundamental news when trading gold. So when we look at this from the 1 hour time frame, it's a similar market movement, but you see a more clearer picture as to how price is moving. Okay, good. Now there are important things you have to consider in your trading journey. All right, and what are those things? These are what I'll be sharing with you. Okay, now is the risk management. Okay, risk management is very important, and I'm going to walk you through several steps to implement risk management. Now, number one of the steps that is important for you, to use risk management is, if you are a total beginner, you need to practice on a demo account with a virtual money, right? And if you are not a total beginner, of course, it's also an interesting journey. You also need to leverage on the use of stop loss. Okay, always use stop loss to limit your potential losses. All right. Now, 3, trade with a risk to reward ratio. Aim for a minimum of 1:2 risk to reward ratio, meaning you should aim to gain at least twice what you are risking. That's very important. Okay, another point is this: you have to risk a small percentage per trade. So you don't want to put 100% of your trades in one basket. You want to risk at least 1% to 2% per trade. Also, diversify your trades. It's important that you streamline and pick selected 2 to 3 currency pairs that you are trading with, and don't just put all your funds in Euro USD and Euro USD alone. You can put part of your trade in Euro USD and part of your trade in another currency. Just diversify your trade. Also, avoid over leveraging. Okay, avoid over leveraging. 7, stick to your trading plan. Okay. 8, keep up with market news. It's very important that you keep up with market news and stay informed about economic events and news that impacts the forex market. Also, avoid over trading. Avoid over trading. So don't over trade. Okay, when you lose a trade, you can take some time to rest. Don't try to gain back what you've lost almost immediately. It doesn't work that way. You might end up losing everything you have. Also, review your strategy and make adjustments regularly. So sometimes your strategy might not align. Try to review your strategy and make adjustments. Now, we have our trading app, and it is functional 24/7 and has 24/7 customer support and a strong commitment to funds and data security. It is fast, reliable, fast execution, lower spread, zero commission, and it is available on both Google Play Store and Apple Store, and you don't want to miss out on these opportunities we have to offer to you. And here is an amazing opportunity to get 100%, to double your deposit while you use the promo code on the screen, Tunmise 100, TUNMISE. And you can take advantage of this in just 5 steps. 1, open the trading app or visit our official website. 2, go to your profile. 3, find the promo code section in the menu. 4, enter the promo code and press activate. 5, make a deposit and enjoy your bonus. That is not enough. If you want to get in on this, use the promo code and enjoy the bonus. In summary, our discussion today has covered on price action, and we've had a review on strategy, multiple time frame analysis on a live chart. And the key takeaway I want you to take away from this session is: 1, analyze all the trading instruments that you want to trade. Review your actions and reflect on your decision. Keep up with the latest market news. Use educational resources to enhance your understanding of trading strategies and tools. We value your feedback. So we have a feedback form where you give us a feedback on what you think about our webinar and how we can improve our webinar sessions. Okay, so please take a moment and fill out our survey, and your feedback is very, very essential for us to improve our future webinar. This survey takes just 1 minute. I look forward to seeing your feedback. Thank you, and see you in our next session. Bye.